Okay, good morning and good afternoon, everybody. Welcome to the BI Washington Policy Pulse. My name is Nathan Dean. I'm a senior policy analyst in Washington, D.C. Joining me today will be Andrew Silverman, our senior tax analyst up in New York. I'm gonna put Andrew through the ringer in a little bit and ask him some flash rapid questions on corporate tax and other tax policy stuff. But before we get to that, I just want to talk briefly about what we're seeing this week. And first, let me start with the presidential debate and the presidential campaign. So it's going to be a fairly quiet week. Both the Vice President Kamala Harris and former President Donald Trump are going to be going around to swing state districts, and also President Trump will be here in Washington, D.C. So if you live in Wisconsin, Michigan, Pennsylvania, chances are you're going to see a candidate, if not this week, but the next week. But where I'm going with this is that when it came to the presidential debate last week, we looked at it from a policy perspective, and it was fairly light on policies as we anticipated. And so we really didn't have much in the way of saying that this debate really changed the narrative, so to speak, on policy or policy positions. We'll leave the political calculus to other folks at Bloomberg, but I wanted to make sure that you were aware that from the presidential, or at least from the policy side, we really didn't have much to go off of. A couple other things interesting to note. Last week, there was a speech by Fed Vice Chairman Michael Barr about the Basel III Endgame, previewed what we think will be the proposal of the rule, or a portion of the rule that could be out as soon as next week or the end of this week. I apologize, I didn't check my email to see if the Fed had announced anything, but we're anticipating the Fed is going to announce a meeting any minute now where they're going to release the next version of the Basel III Endgame. Now, Vice Chairman Barr actually laid out what the overall impacts are. I'm not going to go through the market credit or operational risk provisions. If you need that, give us a call and we'll make sure to get into that. But from a high level perspective, you may recall that for the GSIBs, these are the Bank of America, the JP Morgans, and so forth the world, they originally were going to have a 19% increase in capital requirements. We had estimated it to be around 7 to 10%. Vice Chairman Barr came in and said it's going to be 9%. For the mid-sized banks, it was originally around 5 to 6%. Now it's going to be around 3 to 4%. But the other major change here is that the Basel III Endgame proposal, the original one, was applicable to banks 100 billion and up. Now it's only applicable to 250 billion and up, minus one provision related to unrealized gains and losses. So if you're a bank between that 100 and 250 billion dollar level, you're now out of the Basel III Endgame, outside of that one provision, and you're looking at around a 0.5% increase in capital requirements. So we'll get to specifics when the rule comes out, but wanted to give you an update on that. Also, in the financial regulatory space, the FDIC is having a meeting tomorrow to talk about to finalize a statement on merger transactions. This is somewhat important if you're in the M&A space, or at least you're curious about bank M&A. The FDIC has some guidance out there. The Office of the Comptroller of the Currency also has some guidance out there. It's actually a little bit different, but it looks like the FDIC is going to go ahead and finalize that. Essentially, all you need to know is that bank M&A is tough. It's going to remain tough. This guidance does lay out certain parameters about how it's going to be tough. But remember, guidance is guidance. It's not a rule. So if the Republicans come in, if President Trump wins, then guidance could be easily overturned. Just some stuff going on in the House this week. They're going to have several anti-ESG bills that they are. Last week was the hearings. And some of the additional votes in the House. More votes will come this week. And then over in the Senate, Senator Schumer is planning a vote on IVF. Essentially, this is the week before they get to the government shutdown. This is the week where they're trying to score political points. When it comes to the shutdown, we talked about this last week with Dwayne. I don't need to remind you, but again, we don't think a shutdown is going to occur at the end of 2020 or at the end of September. So with all that out of the way, now let's turn to Andrew. So Andrew, you are BI senior tax analyst. You have looked at every single tax issue that I'm aware of, because I'm always the one that calls you and says, what are we going here? So I'm going to ask you really quickly a couple of things. Corporate tax rate. Vice President Harris wants to go up to 28%. We're currently at 21%, right? President Trump wants to go down to 15%. Where are we going to end up? And you can play even scenarios with reconciliation. Where do you think we end up?
Yeah, so that's actually a more interesting question than you might imagine, because the Tax Cuts and Jobs Act reduced the corporate tax rate, obviously, to 21%, and that's permanent. So it actually shouldn't change, and yet we have Republicans and Democrats both talking about changing it. So you said Harris wants to reduce it to, or wants to raise it to 28%. Even the chairman of the Ways and Means Committee, Jason Smith, said he thinks that raising it is certainly a possibility among Republicans. And you pointed out Trump wants to reduce it to 15%. I think it's likely going to change. And the reason that I say that is because the Tax Cuts and Jobs Act is so expensive, right? Making it permanent would cost about $4.5 trillion. And simply extending the TCJA tax cuts for those earning $400,000 or less a year would cost, and implementing Harris's agenda would also cost about $4 trillion. So it's sort of an easy way, I think, for legislators to think about raising revenue, because a 1 point increase in the corporate tax rate brings in about $100 or $110 billion. So I think it's an easy concept to grasp. The revenue calculation pretty simple, and generally it impacts corporations similarly, so it's a little bit less controversial. So yeah, definitely think it's going to change. I don't think it's going to go up to 28%, like Harris wants, and I don't think it's going to get up to 15% either. I think it's going to be something a little bit smaller. I mean, Nancy Pelosi had proposed raising it to 26.5%. Paul Ryan had proposed reducing it from 35% to 25%. I think that range, 25 to 26.5%, is a more reasonable prediction. I think going up to that level makes a little bit more sense to me, but I just can't imagine they're going to bring it down to 15% unless we have a wave election and Republicans take both houses and in the White House.
Yeah, and I should have prefaced my question with that, because the reason why tax is so important, and I've been telling clients that Andrew is going to be one of the most sought after individuals next year, because the Trump era tax cuts for individuals expires at the end of 2025. And if you remember, President Trump used reconciliation to get the tax cuts through, which is a process that you can use once per fiscal year, so that if you have the House, the Senate, and the presidency, you can largely avoid the filibuster, and you can do things. It's a budgetary maneuver, and so you can do things like tax cuts. So the outcome of Congress is very important to this tax debate, because even if you have, let's say, Vice President Kamala Harris winning, but if the Republicans take the Senate, Andrew, correct me if I'm wrong, but those tax changes are going to be more constrained, more negotiated, and essentially it's going to have to be a negotiated solution, as opposed to if former President Trump wins and the Republicans take the House and the Senate, then they can largely bypass Democrats and just go forth, assuming that the party is aligned. So
Right.
second question that I have, there are probably a lot of New Yorkers and New Jerseyites, is that how New Jersey, friends from New Jersey on this call. They care about the state and local tax deduction, the SALT deduction. Walk us through it. Are they going to get relief at the end of 2025?
Yeah, so the SALT tax cap, more than anything else, in my view, depends on the outcome of the election. Because for Republicans, I think it's a fantastic issue, right? It brings in a lot of revenue. It's about $100 billion. And with the cap, the government only loses about $14 billion. And from the Republican perspective, it mostly impacts blue states and Democratic voters. So I think it's sort of an easy way for them to win political points by pointing at blue states and telling the folks in the red states that the blue states are getting more than the red states. And so I think it's a really good, winning political issue. And I'd also point out that New York and California and some other states have actually come up with ways for wealthier taxpayers to take the deduction anyway, by taking it as a business deduction as opposed to a personal deduction. And so that actually even reduces the pressure on the Republicans to do anything about it, and increases the likelihood that they would get rid of it completely if they win the presidency and both houses. But I think if the Democrats gain enough of a majority, if they get one house, or even if the Republicans don't have the type of margin that they'd like in the House and the Senate to be able to do the things that they want to do, I think it's going to come back, because it automatically comes back in full. Congress would have to do something to either prevent it from coming back in full or modify it in some way. And obviously, if if Congress needs to do something, it's a lot less likely that Congress is going to make that change than if something is automatic and it just happens, by its own inertia.
Sounds good. Next up, unrealized gains and losses. We've seen Kamala Harris make statements that she doesn't go as far as President Biden with his goals. What's going to happen there?
Yeah, so it's interesting. When we talk about unrealized capital gains, we're mostly talking about the wealth tax, but there are actually two proposals that Harris has adopted from President Biden that deal with unrealized gains. The first one is the basis step up at death, and in some ways this is actually even more controversial than the wealth tax proposal because it applies to a lot more people. It would cause estates above $5 million to become taxable at death. It makes death a realization event, like you're selling everything. And so your unrealized gains at that point would become taxable. But in this situation, you can pair your unrealized capital gains with your unrealized capital losses and reduce the amount of tax that would apply to you. With regard to the wealth tax, that's not how it works. It's a 25% tax on unrealized gains above $100 million of wealth plus income. But you can't actually net your losses against your gains. So it's actually a lot more controversial. But I should point out that this is very much a wealth tax, clearly, and that means that it's almost certainly unconstitutional. And I say that not only because we had to pass a constitutional amendment in order to have an income tax, and so we'd probably have to do the same thing for a wealth tax, but also because in a recent case, the Moore case, the Supreme Court said in dicta that a wealth tax is something that they find to be unconstitutional. That was 4 justices in a concurrence, but the majority of the justices carved out wealth taxes from the opinion as a whole to say that, don't construe this opinion to make it more likely that a wealth tax can be adopted by the federal government because this opinion has absolutely nothing to do with wealth tax. And as I said, 4 justices said that a wealth tax, in their view, is unconstitutional, even though the opinion had nothing to do with wealth tax. So the likelihood that she would be able to get that 25% tax adopted and it wouldn't be overturned by the Supreme Court, I think is pretty unlikely. But the basis step up at death, not unconstitutional, so that makes it, I think, more likely that it could be adopted. So, yeah, so it's an interesting issue, and we'll see how it shakes out. But just generally speaking, I think Americans sort of feel uncomfortable about taxing unrealized gains, especially if you can't pair your losses and your gains together.
Sounds good. So a question that actually came from my babysitter. So my babysitter came to me and said, I get a lot of tips. I see that both candidates want to exempt taxes for tips. She works at a restaurant.
Yeah.
Can I go back to her and say that her tips are going to be exempt from tax under either scenario?
Well, if you believe the candidates, then the answer to that question is, of course, yes. But the issue, I think, with tips, even though Trump has said he wants to prevent tips from being taxed, and Harris also says she wants them to prevent them from being taxed, and Trump has also said that he wants overtime income to be exempt from tax. Trying to actually put that kind of change into practice is extraordinarily difficult because drawing the line between compensation and tips, or regular compensation and overtime compensation, is like really subjective. And so trying to monitor that is really complicated and difficult for the IRS. And right now, the IRS takes the view that there's probably a lot of tip income out there that they're not capturing, but they don't know what they don't know. And so they haven't been really good about going out there and trying to figure out what the amount is that they're missing out on. But if they change the rules and now tips become exempt from tax, then people are much more likely to say, oh yes, I have this compensation, but I have this whole body of tip income, so don't tax that. And then I think the IRS feels obliged to go out and try to see whether those things are accurate. And so it becomes something that not only is the government going to lose a whole bunch of money on non-taxing tips or overtime, but I think the IRS now feels the obligation in that scenario to go out and determine whether or not the tip income returns are accurate, and so that becomes a lot more expensive for the agency and takes up a lot more of their time. So you get this sort of horrible double whammy for, Treasury and the IRS also having to spend all this money to try to monitor things. And so, so the short answer I would say is, even though both candidates are promising that, I think it's unlikely that we adopt that. I think Congress is probably going to say, yeah, that's probably a bridge too far. And I don't think you can do it just via regulations.
That you bring up a good point. I mean, the reason why the tax debate is really coming about next year is because those individual tax cuts expire. Do you see a scenario in which individual tax cuts goes up for many of the folks listening on the call?
Right. So that's one of those other changes that are automatic. So, I mean, I think the headline is that we now have a top rate of 37%. It would go up to 39.6%. But, the brackets also shift. And so we would have higher taxes essentially across the board. But and I mentioned this earlier, Harris has taken on Biden's promise that that he wouldn't tax people higher that make $400,000 or less, essentially saying he would keep the Trump tax cuts in place for those that earn $400,000 or less. But the issue with that, and Harris said that she would also abide by that promise. The issue is that it's very, very, very expensive. It costs about $2 trillion to do that. And so coming up with $2 trillion is a difficult feat, right? And interestingly, the child tax credit proposal that Harris has is also about $2 trillion. And so, $4 trillion is even more difficult to come up with. Just for some perspective, as I said, 1 percentage point change in the corporate tax rate brings you in about $100 billion or $105 billion. And so, to bring in $2 trillion, you'd have to raise the corporate tax rate from 21% today to 41% or 41%. So, I mean, that's a huge change. So if you're not going to do that, then what other tax rates would you have to change, or what new taxes would you have to introduce to come up with that enormous amount of revenue? And it puts me in mind of this old quote for tax policy folks that I quite like, which is that, ideally, what you want to be able to, what a tax authority wants to be able to do is pluck the most feathers from the goose, with resulting in the smallest amount of hissing from the goose, right? So you want to be able to introduce taxes, but not have people get upset with you. And I feel like in this situation, it's unavoidable, right? Maybe you could raise $2 trillion for your child tax credit proposals, and the $25,000 starter home credit is not horribly expensive, but you add on top of that the $2 trillion of the Trump tax cuts, and then it becomes sort of not feasible for her to do it without making people upset. And I find the whole thing to be kind of ironic, because it's Donald Trump's tax cut. So she's saddled with tax cuts from her opponent, and then she didn't make this promise. It was Joe Biden that made the promise, right? So she inherits that. And so she has this thing that was put into place by her opponent, and a promise that was put into place by her predecessor, and yet she's sort of burdened with this thing, and it's ironic and kind of sad for her, because I think it means she's either going to have to scale back on some of the things that she's promised, or she's going to have to raise taxes in some way, upset people. The whole thing is kind of a mess for her, and she hasn't talked about it, and Trump hasn't talked about it, and people really haven't focused on it. But it's going to be a difficult thing for her if she ends up being elected.
Well, it's also going to make 2025 a very interesting year for you indeed. And I'm going to take the next 30 seconds to pause and say, if you have any questions, please put them in the chat. But Andrew, 2 final questions from me. How do people get in contact with you if they want to talk to you? You're sitting in our office in 731 Lexington. So my second question is, what's the best sandwich or salad takeaway place in Midtown Manhattan?
Oh gosh. Well, I mean, I think the best way to get in touch with me is just on the terminal. You can look me up Andrew Silverman. My email address is asilverman38@bloomberg.net. To be honest with you, I don't go out for lunch anymore. So I know it's very controversial what the best places are around town, but I'm probably not the best person to ask. Although I will
Fair
say
enough.
that every once in a while I go to Chick-fil-A, which is just a couple doors down.
Fair enough. Well, thank you everybody for your time this week. Thank you again. If you have any questions, feel free to reach out, and we'll talk soon. Thank you.